Right, guys, let's quickly take a look at that Aussie CPI data coming up tomorrow morning. Nice and early, 2:30 UK time. Now, the first thing to note about this print is that obviously it's taking place during Asia Pac, which normally gives us pretty bad liquidity on a normal week, pretty low volumes on a normal week. This week, however, things are just exacerbated a little bit, as we've been discussing, because we have month end, we've got quarter end, we've got half year end, we've got a lot of idiosyncratic things that's impacting the markets right now, like the political stresses taking place in Europe, obviously the election coming up in the UK. There's just a ton of stuff. The debate between Biden and Trump. There's just a ton of stuff that the markets are, that's moving in the background. So whenever we have weeks like this, where things are a little bit messy, where the price action is a little bit messy, we want to take extra precaution when we trade things, especially during the Asia Pac time frame, so or session rather. So, just be very cautious with this one. It can be market moving, it can be tradable, don't get me wrong, but we need to be very careful with it, guys. It's something there's no need for us to force a trade on something like this, especially during those hours of the day, and then just end up regretting it. I mean, take a look at the CAD data that we had today. It was the perfect print for a short-term trade to the upside in the CAD, and the markets just didn't have any of it, right? The CAD just basically brushed it off, which is quite, surprising given the current context. So just keep that in mind as we approach that CPI data for Australia. It can be market moving, but we just, we need to be a little bit careful with it based on this week's price action. So in terms of where we are from a CPI point of view, look, the RBA, the Aussie has been a surprising mover for me from last week. If you take a look at what the Aussie has done at the index level, it's just, I don't fully understand this move, to be honest. We've seen a lot of strength for the Aussie dollar. And this strength, I just haven't been able to pin it down. A lot of participants are just taking the easy way out, saying, oh, we had a very, very hawkish RBA. That's why the Aussie dollar reacted that way. But in all fairness, if you take a look at what happened to rates markets, we haven't really seen that big of a change in terms of interest rate expectations for the RBA. If you consider the amount of upside that we had, you would have expected to see the markets at least pricing in close to, a 50-50 for a potential hike by the amount of strength that we saw for the Aussie, but that wasn't the case. Similarly, if we take a look at what the RBA actually said, are they leaning hawkish? Absolutely. They say that the board discussed whether to hike rates at the meeting. Board wanted to make the point that they are alert to upside risks on inflation. Board did not consider the case for a rate cut. So they are leaning more hawkish, absolutely. But they are not screaming hike from the rooftops. I mean, we clearly heard them say that momentum and economic activity is weak, including slow growth, rise in unemployment, and slower than expected wage growth. Need to look across the broad economy, not just Q2 CPI. Would not say that the case for a rate hike is increasing. Use of vigilant, the word vigilant, does not mean an interest rate rise is coming. So when I read stuff like this and look at read through the whole statement, this move in the Aussie dollar doesn't really make a lot of sense, in my opinion. To add to that, the normal markets that is normally correlated to the Aussie dollar is moving in the opposite direction. Well, the Aussie is moving in the opposite direction to them. I mean, copper prices have stayed pressured, currently pushing down towards that 435 level as we speak. Apart from that, the yuan is weakened as well. So this move, in my opinion, it just doesn't make a lot of sense. I don't know what's driving it right now. I don't think it's the RBA. I don't think it's risk sentiment either. If you take a look at what's happened to sentiment, it's just been a pretty weird move. There is a possibility that maybe this upside that we've seen, as Nuno noted quite rightly in the chat a little bit earlier today, maybe the upside could be the markets pre-positioning themselves for a higher CPI. That would probably make the most sense, right? Out of every other possible reason for this rally. But even then, it just feels a little bit aggressive for the amount of upside that we've seen. So that's me ranting about the move that I don't understand in the Aussie dollar. There's really nothing to do with that. It's just, for me, I think based on the way that the Aussie has moved, based on the fact that it's moved against the correlated markets, the fact that the move, in my opinion, is too aggressive, it means that my preference for tomorrow, on top of that, adding to positioning as well, my preference for tomorrow would be to look for a short in the Aussie dollar if we got a miss. Even if we got a as expected print or in line with prior print, not as expected, in line with prior would obviously be a miss in itself. That I think would be good enough for a trade. It also means that I would want to see a number that is 4% or higher to get me remotely excited about potentially buying it. Just because I don't really agree with the upside move that we've had already. So the risk is that the markets have already priced in quite a bit in a very short space of time, that it would probably take a very hot print to see them pricing in even more. Now, don't get me wrong, if we do get a print that's, let's say, 4% or higher, there's a high possibility that they'll start flipping very close towards a potential hike again for the August meeting. And, that could be tradable. But again, I think we probably need to see 4% or higher, preferably above 4%. But that four number will be a very psychological number for the markets. And I mean, if you take a look at where we are from an historical point of view, let me just quickly do this. Let me just quickly open up that Aussie chart. Just give me a second, guys. Just want to show you guys what this looks like. Here we go. Nope, that's not the one. Where is the data? Here we go. Sorry, guys. So anything above the prior is already going to be the highest since November. But if we start pushing above that 4% level, I mean, that's going to be a serious level for the markets to... the markets will get rattled if we get a print of above 4, even above 3.8. But, for me, I don't know whether that's going to be tradable. I don't think the Aussie can't move higher on a 3.8 or higher. But I think 4 will be better from a tradability point of view, given the weird price action that I explained that we've seen in the Aussie dollar, which just hasn't made a lot of sense in my opinion. So getting to the numbers then, what do we need to see to give us a potential trade tomorrow? Let's start with the simpler one, which I think is a miss in the data. Keep in mind there's a couple of different items released at the same time. The markets will be paying close attention to the headline year over year as well as the weighted CPI year over year measures. Those two will catch the most attention, but we've got a couple of other ones as well, especially those the core measures, if you will, the X volatile items and travel, both the year over year as well as the seasonally adjusted, as well as the annual trimmed mean. These numbers are important, not as important as these, but all of them obviously gives us the CPI print as a whole. So as a miss, what will be fantastic, right, is if we can see these three measures as a bare minimum give us a 3 handle. That'll give the markets a little bit of reprieve in terms of their fears about a potential another hike coming out from the RBA. And preferably, when it comes to that weighted CPI year over year number, 3.6 or in line with prior should do the trick. I mean, if you take a look at the forecast distribution here, 3.6 is not just on the prior, but you can see that it's a very clear outlier number here versus the bulk of the analysts that was polled for this. So 3.7 already might do the trick, but I don't think that's good enough for a trade. I want something where the markets goes, yeah, okay, fine. Maybe they don't have to be so concerned. I think 3.6 or lower will be a good threshold. That's in line with the prior or lower. So the reason why that's going to be, a good trigger is because the market's already expecting CPI to go up. So if they don't get the baseline expectation and we don't see inflation accelerate, then there's no reason for them to think the RBA will hike. Because if they didn't hike last week with 3.6, why are they going to hike at the next meetings coming up if it stays at 3.6? So that's why I think 3.6 or lower should do the trick for a nice miss. In terms of a beat, like I said, 4% or higher, I think that's the easy one to look for. That it's that 4 handle, so we've got that psychological effect. It's going to be the highest since November. Anything above 3.8 will already do that. But or above 3.6 will already do that. But 4% just gives us that psychological level that the markets will react to. So in terms of a miss, 3.6 or lower. In terms of a beat, 4% or higher. In terms of what to trade, I'm going to keep it really, really simple tomorrow. Let's start with a beat, which is the one that I'm less excited about. The pound strength, in my opinion, it doesn't make a lot of sense. Almost like the Aussie dollar strength we've seen doesn't make a lot of sense. I'm still short the pound. I probably don't want to add even more risk to pound shorts, but had I not been short pound already, if we get a massive beat, 4% or higher for the Aussie, I just think that gives us a very good potential policy divergence play with the RBA then potentially expected to hike rates if we get 4% or higher, and the Bank of England is expected to potentially start cutting rates at the next meeting, at the August meeting. So I think pound Aussie, where's pound Aussie? Here we go. I think pound Aussie shorts on a massive beat does make sense. Again, I'm not a fan of buying the Aussie here. I've said that, but if it's 4% or higher, the markets are going to start pricing in the possibility of another hike. And that could potentially see us drifting back down towards the recent 0 point, which comes in around that 80, 89, 80, 190 psychological level. That'll be a good area to aim for. I mean, a full price will be 180, 189, 250, that recent low going back to May. But it would obviously have to, go through that prior low, that most recent low first. So pound Aussie downside does seem like an attractive option should we get a massive beat in that data. What about a huge miss in the data? Should we get that 3.6% or lower as a threshold for a trade? What can we look to trade? There's a couple of things that I like the Aussie dollar against. The most attractive one, though, is still the Kiwi. I mean, the markets were so concerned about the growth data. GDP came in okay, and apart from the RBA, it's still the only other central bank that is expected to stay higher for longer. I mean, I'm not counting the BOJ, of course. I don't think they count at this stage, but it's the only other central bank that's expected to stay higher for longer. The big problem with Aussie Kiwi right now is that the Kiwi is massively stretched, a lot more than the Aussie. So that makes it less attractive. That would have been my first option, but again, it's a little bit less attractive in terms of the positioning data. It's not impossible. Maybe we can look for a move back down towards 108.30, but I don't know. It's gonna be a bit of a risky one given positioning. The other one that I quite like, again, risky, is Euro Aussie. I think a lot of bad news has been priced in for the Eurozone at this stage. If you take a look at those spreads, if we get the outcome that the markets are expecting as a baseline, either a hung parliament or a far right majority win, if we get any of those two things, I think what's priced in is already too aggressive. Let's put it this way, is already more than adequate as a risk premium for what might happen on the fiscal side. All bets are off if we start getting, risks of Macron resigning. All of that will just create uncertainty, will probably create more upside in the spreads. So I'm assuming if we get a hung parliament, I'm assuming he stays there and he doesn't do something silly. But if we get those types of outcomes, I don't see that as being too even more negative for the euro, if that makes sense. So there could be a little bit of a Euro Aussie upside play on the back of that running into the elections. There's obviously a lot of risk associated with that, but at these lows, if you take a look especially at the market internals, there's a lot of them suggesting upside risk. So I like the Euro Aussie higher. It's a risky play, just like the Kiwi, but it's one that I like. In terms of other pairs to choose, I mean, Aussie CAD, maybe. I would have expected more upside from the CAD today. We just didn't see that, right? It's not like the CAD. I mean, we're still trading fairly close to session highs. It's just sterling that's, super strong today as opposed to CAD not following through. So Maybe Aussie CAD could be good on a big miss as well. We are once again testing that huge level of support around that 90-60, 90-50 level. Let's call it 90-60 level. If that does break, next stop could come in around that 90-20 level. Let's just call it the 90 cents level. So that could be a good move to the downside as well, based on the beat that we had in CPI today. Again, it's this, I'm trading the pound CAD, which should have, in my opinion, moved lower already based on that beat. But sterling is just super, super strong for a reason that I cannot explain, especially given the risk of risk premiums that should be increasing going into the election. But anyway, so preference for tomorrow then, if we get a huge beat, pound Aussie downside is one that I like. If we get a huge miss, Aussie Kiwi I like, but it's risky. Euro Aussie I like, but it's risky. Probably the best play based on today's data would be Aussie CAD shorts. But any one of those three I would be happy with, if that makes sense. So that's just a preview for that Aussie jobs data. Again, be careful of the liquidity at that time of the day. It's going to be messy, especially in a week like this.